What's up, guys? We're doing a run through, a breakdown, trading view, the basics. Let's see how it goes. I hope you guys are having a good night out there. Sure you are. I have no idea what you're saying now. So let's make it happen. All right, first few, I think, basic things about trading view to approach. One, I mean, this is personal preference, but use the dark mode. Just right click anywhere on the chart, go to color theme, change it from light mode to dark mode. This will give your eyes cancer if you keep trading, keep charting with it on. Simple. You'll notice there's a few differences between what your chart might look like and, well, maybe this one looks like it, but my normal chart. So there's a few little details that I actually think are important. What we're going to find out as we go through our journey in charting is that noise, unneeded visuals, they're really going to distract us from the important. Right now, there's not a lot on this chart, so that might be hard to understand, but these can quickly get cluttered. If you've ever done any trading view, you've probably run into that problem. So what I do, we're going into settings, right click anywhere on the current chart you're at, go to settings. What we're going to get rid of is these vertical lines. I do not understand why these come standard. So what we're going to do is click vertical grid. We're going to go to this dark black. We're going to do the same for horizontal grid. Then we're going to go to background and we're going to change it up. I guess it starts on that dark black. Cool. These numbers are a little small in the scale, so I think moving them to about 20, that seems like the sweet spot. Now your chart looks a lot like mine. I keep what is in the background here. This is the watermark. For you guys, watermark probably not important, so actually let's turn that off too. When we go to settings, same thing. All you do, right click anywhere, down to the bottom, settings. Click that off. You don't need that. When you're streaming, it's nice to have in the background. People know what you're doing. You don't need it. So if you've seen any of our TA breakdowns, any of our in-depth analysis, you know we always start with a new chart, but we start zoomed out. This helps us get a better view of what's really going on. So we're going to do that here. We're going to go up to the top left in our time frame. We're going to scroll all the way down, and we're going to go to the month. In crypto specifically, you're going to see a lot of data get smushed. This is actually not the same price trading for months. This is actually equal volatility likely to everything else we see here. The reason for that is this chart is on standard. It's not on logarithmic. So in order to change that, what we're going to do is take our mouse over to the scale. We're going to right click it. And we're going to do a few things here. One, you'll notice likely currency is selected. We don't need that. That just blocks a little bit of the scale, and it's just visual clutter we don't need. Two, we're going to right click it again, and we're going to change our chart to logarithmic, and you're going to see why here in just a second. Well, that looks a little crazy. So what happened is this chart rescaled, and it is now looking at it in a logarithmic form instead of a normal. So in order to get this to look okay, just double click on your scale. You're going to left click, double click, and that's going to bring the chart back into auto mode. What auto mode does is it adjusts the chart to fit the data that is visible. So you'll see the numbers on the side are going to rapidly change back and forth because it's fitting it. If we want to take this mode off, say we want to look higher, we want to see numbers that aren't visible here, all we have to do is left click on the scale, move it a little bit, and now we can move the chart around again. Again, get that back, double click it. Now we aren't able to do that. Auto mode will lock you in to only what is visible currently. You zoom in, you'll see that again. So we're out of auto mode. We're on the monthly. How do we start here? We're going to start by identifying the obvious, I guess that's to me obvious, supports and resistances. So we're going to go up to our tools. All of our tools are on the left side of the screen in this beautiful menu. Oh, you can't see it. I need to refit this. All right. A little technical problem here. Hit the screen. There we go. I don't want this either. This is our first one, guys. We're gonna have problems. Let's get rid of everything. Oh, don't need the Bitcoin ticker either. Awesome. Relatively smooth transition there, Tom. Good job. All right, so you can now see this. I probably should also note, when you start TradingView, you may also see something like this on the side. In general, this information is not that useful. You'll see this buy sell indicator. This is just a lot more visual noise that we don't see. And what we're really aiming to do before we even get into the chart is to cut down on all of the stimulus. There's gonna be plenty of things to place on this chart, and we don't need a bunch of moving, color changing numbers that aren't that important to us. So all we do is click that button again. It should be the top right. I think that's our watch list. And to get it back, we just click it again. So let's get rid of that. You may as well, I'm just gonna throw something on here. You may also start and notice that you have indicators at the bottom. A lot of the time, they're gonna be taking up a lot of room. This is more visual clutter. So in order to get rid of any indicators here on the bottom of the screen, we're simply going to left double click anywhere on the chart, and that's gonna remove them. To get them back, maybe you want to check them out again, just double click anywhere on the chart, they come back. If you want to look specifically at any of these indicators down here, all you do is double click similar to on the chart, and you'll only see those indicators. Double click again to get out. And since we're not going to really even be talking about this right now, we're going to double click anywhere on our chart and get rid of it. So round and about, we're coming back to the support and resistances that we were talking about. On the left-hand side is our toolbar. You'll see many different things. For now, we are only going to go up to trend lines. We're going to select it. I prefer to use horizontal rays. You'll see me use them a lot. However, horizontal line is really the same thing. I'll show you the difference here quick. Horizontal line is just going to project it all the way, a line from the left to the right side out to infinity in both directions. Whereas the ray is going to only begin the line or the horizontal where you select it, and it will project it out to the right into the future. I like these simply because I think anything we can do to cut down on visual unneeded stimulus is going to help us be more successful. So I prefer the rays. You can use the horizontal lines as if you'd like, doesn't matter. So you, again, go to your tools. The first thing under the crosshair should be trend lines, and there'll be a little right arrow. When you click that, you'll expand this menu. And there's lots of things here. I'm not going to go through all of them in this video. Trend line, info line, a lot of these you really won't find yourself using often. In this list, the ones that I use most often would be trend lines, horizontal rays, very occasionally vertical lines, and semi-commonly parallel channels. For now, and in this practice, we're pretty much only going to be using horizontal rays. So I'm going to select that. We're on a zoomed out timescale. We have our horizontal ray selected. So how do we find supports and resistances, major ones, important values that are going to give us an anchor to then start doing technical analysis? Essentially, what we're going to be searching for is where we see price move in one direction and then reverse. The areas that stand out to me are, at first glance, right here. This is December 1st, 2017. We see a large rally that is sold off and reverses. This suggests that there is likely resistance here. So I'm going to place that trend line. What you'll notice is this actually isn't perfectly there because we are humans and we're not perfect at placing things. So an important tool that I find for doing this is, again, on the left side of TradingView. Scroll all the way down, you'll see this little magnet guy. Give him a click. That'll enable them. And what this does is instead of allowing you to freely place these, it will attempt to snap these lines either to wicks, as you can see as I move this around, or to the bodies of the candles. I like doing this. Not a lot of people do this, I've noticed on YouTube. I like it because it's giving you the exact value. What we can see here on this chart is that this may be a resistance on our monthly time scale, and conveniently enough, price is currently right there. It has traded above it, sold back below it. That's a good sign that this is a valid resistance. So resistances can only ever be above price, and supports can only ever be below price. And that means current market price. Right now we're looking at Litecoin. It's trading at 226.97. And the resistance we identified on the monthly is 227.17. So exactly where we are. Super inconvenient for this video, but that's okay. What we can also do is take the highest point in price at any given time, which is 420 on Litecoin, and we can assume that this is likely to be some resistance as well. The highest point in price on any chart is likely to act as resistance. So we've identified two. We're going to look at potential supports. So the lowest point in price is likely to be a support as well. However, that is so far away from price that this is unlikely to ever really interact meaningfully. So we're going to look for that same thing that we found up here. We're going to look for ones that are a little closer to price so they can be more relevant. What stands out to me is this peak where we saw price increase and then reverse. So I'm going to place that again right here. Because price is above this newly generated ray, we can assume this is support. It is below price, so it may support it if we see a sell-off that reaches that level. The monthly is really rarely going to give you significant points because it takes so much time, because it's showing us so much time. It's not always going to be super important by itself, standalone, but it's important just to zoom out and get a map of where this asset is traded. So now that we have a support below us, a resistance where we are, and a resistance above, we have a good guideline. $122 is below us. We're currently at 227, and we're testing that resistance. And above us is the all-time high at 420. So I think we're pretty good here on the monthly. What we're going to do next is zoom in, and you're never going to guess. We're going to keep doing this. We're going to keep zooming in until we have a good picture of what's going on with price action. So when you change time frames, you'll notice that you no longer can see everything. Use your mouse scroll wheel to manipulate the time scale or the x-axis here. You can also do it by moving your mouse down to where the date is, clicking and holding, and you can adjust it this way as well. As always, you can double click almost anything in TradingView and it's worth a try. So if you double click the x-axis, the time here, it will auto scale the time, and that's the same as the price. So now both are auto scaled. And to undo that, all you do, click and drag again so you can move it around. All right, we're on the weekly. We're a little more zoomed in. We're starting to get a picture. What you'll notice right away, maybe not, is that our monthly points, our monthly areas that we identified previously don't perfectly line up with the weekly. That at first might not make sense, but it makes sense if you think of weeks don't always end at the same time as months. This month it actually did happen, but that does not happen that often. So this is logical when you think of it that way. Weekly supports and resistances should be identified as well. So I'm going to zoom in a little bit more to recent price action. Looking at what's happened here recently, we see that price has moved above that monthly resistance, back tested it, and now moved up to test the monthly resistance that we identified earlier. In doing so, right here, we saw price reverse. And we can logically assume that doing in that act, orders, buy orders, and sell orders were executed, thus creating a price level that's important, a new one. That's at 170 here. On the weekly, it was passed through, and we don't see price return to there. So this support is untested. But it is still a weekly support. If we're to see a rejection from 227, 170 would be the next logical spot to look, at least according to the weekly, as that has not been back tested. Might look something like that before retesting resistance and possibly looking to continue higher. We can identify a few more levels here. Let's see. We see that similarly, but a little higher to the monthly, we have that same combination where price moved up, the week closed, and after that close, we saw continued selling or trend reversal. So the weekly is showing a little bit higher, showing that there is resistance a little bit higher than the monthly. Which is more important? The answer is always going to be the longer the time frame, the more important. However, they're both of importance, and they're both able to be used. I'm actually just noticing this right now. But this support we identified that happened recently, that's January, actually is already a support. So, well, this is cool. I didn't think that we'd have this episode. I'm going to drag that over there. Oh, that fits perfect. Look at me learning while I'm doing a lesson. So what we had here actually was a resistance, and we saw that as price approached it, pulled back, tested that support. We actually had a resistance there previously that wasn't necessarily created by this price action, but it was confirmed by this weekly price action. That's pretty cool. I didn't see that. So I personally like to turn my rays if they are support green, and I like to turn the rays red if they are resistance, and obviously it doesn't matter what color you choose, but I think it's important to distinguish between the two. I think that these look like pretty decent values. There are a few here that are unlikely really to see much action. $80 here was broken a while ago and tested. Price is unlikely to return to there. The lowest point here on the chart, $25, unlikely to return to there. But now you can see that we have somewhat of a map going on. We can see we've broken down what could be viewed as any value between $22 and $420. We've broken that down to 1, 2, 3, 4, 5, 6, 7 price points. 7 price points is a lot easier to deal with than any integer or any number in between. So we've already successfully charted, or at least mapped out, most of what's going on here with Litecoin. We're going to continue again. So we're going to go up to the top left where we selected the weekly. We're going to scroll down and we're going to go to the daily. We're going to zoom it back out again, and we're going to get an idea and get a view. How has price interacted with these levels? Pretty well, actually. We saw consolidation here on the daily, and that was a weekly resistance that it broke. We saw price on the daily. We zoom in. We saw that resistance prove that it was resistance by rejecting this rally. When the market was ready, when bulls had enough power, they broke through it, back tested that support, pushed the price up farther to reach up to what was resistance. Sellers pushed the price back down to support. It held, and buyers entered the market again, breaking the previous high and pushing up to that, I believe that was monthly resistance right here. And we can see that at each of these levels, not only is it trading there multiple times, it has a tendency to reach one of these levels, reject, meaning turn around, gather strength, only to push through it. And once it does so, it seems to commonly then turn back around and touch those levels at in the opposite direction. So what I really mean by that, because that probably was a little confusing, is what we see is, let's take 122 for example. What we commonly see is price moves up, is rejected by it as resistance. The market pushes again through that resistance when it tests it, and then back tests it as support. So right here, this was resistance. Once the market broke through it, sold off back to it, it flipped that resistance to support. We see this very commonly. It is not guaranteed, but this is more often than not, whether it is a support or resistance we're talking about. Once that price is broken, we see that the market tends to, it's called back test, come back to that same price again and attempt to break it in the other direction. And if it holds, then we flip from resistance to support. And we see that here actually pretty clearly, which is cool. So now that we're zoomed into the daily, we're going to do the exact same practice that we just did on the monthly and the weekly. I know a lot of this is not super exciting, guys, but this is how you set up a chart. What I first see here is these multiple candle closes on the daily. The market was unable to push above and sold off. However, it looks as if we might even be able to turn this green. We're going to zoom in a little more, as $227 seems to be holding as support. These candle closes were unable to break 237, but the selling pressure was unable to break and close above 227. So to me, that's a valid support. But we have another resistance to add. Because of these candles closing and opening and unable to break through, we have a daily resistance at 237. And now what we've really established here is a trading range. What we just talked about, here's a good example, is price moved up to resistance, sold off, managed to break it, and now it's pulled back and tested it as support. What I would expect now is to see either a break to the upside of 237 or a break to the downside if 227 doesn't hold, and possibly retest support down here. A break to the upside, the next logical move would be to look to our next resistance, 324. This is a pretty basic look on a chart, but by starting on a long time frame without using any indicators, without using anything fancy, we've gone through and identified multiple price points of significance on different time frames. And in reality, we could look to trade using just these, nothing else, no news, no divergence, no moving averages. Simply just looking at candle closes, we can make pretty good guesses as to where the next values might be. And these, I think this is the fundamental aspect of technical analysis, is we are looking to beat the odds of just flipping a coin or guessing. And by identifying these price points, we've cut down the amount of data or the amount of possibilities from virtually infinite to, I think, about 8. So there we go. I think that's a pretty good breakdown of how to approach a chart. Not super in depth. You got some good little details, I suppose. The trick is start zoomed out, identify important price values, start zooming in, and of course you would repeat this if you were trying to make a trade actively on Litecoin right now, or on the daily. You'd repeat this. You would go in closer, maybe to the 4 hour, see how that's see if you can identify supports and resistances on the 4 hour. Continue to zoom in and you'll find that these hold true. These hold really well. You'll see the price interacting at these values over and over again, proving that they're significant and more meaningful than any given random value in between. I think that's pretty good basic. I hope you guys enjoyed that. And it didn't take nearly as long as I thought. So, all right, awesome.